Hello guys, I want to talk about how to use liquidity sweep in your trading. It's a powerful concept that you must incorporate into your activity as a trader. You understand? This concept repeatedly has been proven to work. You understand? So if you're a trader and you have not using this concept, you are missing out on a lot. You are missing a lot. So I will show you powerful ways you can use it. But first, I will first of all start by showing you how to the concept itself, how the concept works. So this is a textbook demonstration of the liquidity sweep right on our dashboard here, right? So what you're expected to do as a trader is that, okay, before you start trading, if price is approaching this place, you understand, and price obviously falls from this place, some trader believes that, okay, once the moment the price is returning to this place again, it could likely fall, so they'll place their stop loss above this previous resistance. But price does not respect it. Price doesn't work in that manner. It will first of all take out the pending liquidity or pending order here by going upward the to the point of interest, or which is a supply zone as we may call it. You understand? So price will first of all go to that place. The action or the process of the price taking out this liquidity before going to purchase this point of interest is what we call liquidity sweep. And some traders use it to know the bias of the market, or to equally know the reversal pattern. So once this thing forms, some trader will wait for the point of interest. Once the point of interest is mitigated after the sweep of the liquidity here, they will now position to ride it to the downside. So this is actually how this thing works, guys. So I will take you guys to the powerful ways you can use it. You can use it on your trading. Number one, you can use it as to spot price reversal. So this is a typical example of how this thing works on spotting price reversal. So this is a typical example, right? So so in this case, the first candle, which is the bullish, this is the first candle, right? Which is the bullish candle. So you can use this concept on daily time frame, especially higher time frame, weekly, monthly, daily, and 4 hour. You understand? So the idea is that price has been going up, you understand, and all of a sudden these are pending order here. This week that you are seeing are pending order, because it is actually a resistance that pushes downward before the price continue to this upside with this bearish candle, you understand. So the process of moving upward, you understand, by this bullish candle created this week, and this week is a rejection for us, because it does not the body does not end eventually as a bearish candle, you understand. So that is why we have this long rejection, you understand. So, and this long rejection is actually what caused the sweep of liquidity here. So the idea is that before price reversal pattern will occur, it will take out this liquidity, you understand. So the next candle that will open, you are expected to find your entry on a lower time frame, you understand. So once there's a liquidity sweep like this with a candlestick, especially a higher time frame candlestick. So when this thing fall like this, you know that exactly that the price is actually gearing towards reversal, you understand. So this is how to trade this thing, guys. So this is how to use it to spot market reversal. I will go to my trading view, right? I'll go to trading view and show you a live example that happened this week on gold. The market closed yesterday, which is Friday, and I'll show you that this thing actually works. I'll show you how this thing appears on gold time frame. So this is gold here, right? Let's wait for it to load, and I'll show you that this thing actually happens on the higher time, on all pair rather, you understand. So this is it. So this is it. This is the liquidity sweep, right? This is the liquidity sweep right here, you understand? Followed by, this is a liquidity sweep right here. Why? Because the price, people are thinking that once the price touches this previous resistance, it will just go down. No, it doesn't just go down like that. We have a liquidity sweep by this long wick. So this is the liquidity sweep right here. So guys, and you can see it live. I want to remove this thing so that you can see it very clear. Right, this is very clear now. First, we have this number one candle here. Sorry, we have this first candle, second candle, and third candle. So it was the third candle that swept the liquidity of this guy here. So the moment the price pierces through this resistance zone, we have a liquidity sweep right here, and the body closes within the range. You understand? So the next thing you have to do when this next candle is opening on a daily time frame is to look for sell opportunity. And that was why people were trying to sell gold, because they actually saw this thing coming. They saw the liquidity sweep followed by the body of the candle closing within the range, and boom, they started selling downward. So this thing happened a lot of the time. And let me show you the last one that you can use, the last powerful method that you can use. What do they call it? You can use liquidity sweep to trade, you understand? Which is the using it for entry, you understand? You can actually use it for your entry, right? And I'm going to demonstrate it for you. You can use it for your entry, right? You can use it for your entry. This thing is a very powerful concept. It is not only used for reversal, you can use it for your entry as well. So the idea is that once you have deduced your direction that okay, the price is actually in a trend, maybe in a downtrend, or in an upward trend, for instance. So once you have this thing deduced, so what you're expected to do in this case, this is a break of structure here, break of structure, right? Another break of structure to the upside. So as a smart trader, you wait for the price to touch a major order block, fair value gap, whatever you like to trade, you understand, as your point of interest. But we mind you that while you are waiting to touch, for the price to touch your order block or point of interest, you equally have liquidity. There are liquidity here, and this is a great example here. This is the number one liquidity. So you want the price. Why some retail trader will put in their stop loss here, thinking that when price come to this page, it will be automatic buy to the upside. You as a smart trader, you wouldn't just do it that way. You wait for price to take out the liquidity, adding it extra layer of confluence or confirmation. So once the price touches your major demand zone, taking out the liquidity, you have a double confirmation, you understand? It's an extra layer of confirmation for you that okay, we have had a liquidity sweep right here before the price touches the point of interest. And boom, what next you have to do? Place your stop loss a little bit below the demand zone, and boom, right your market to the upside. This thing repeats itself in the market. It is a pattern, it is a phenomenon that have been proven to work over the years. So if you can assimilate this concept into yourself and learn how to use it effectively, trust me, you are going to enjoy the market, because they are literally everywhere. They are littered everywhere on your chart. So your assignment now is to go to your chart and find this thing so that you can use it effectively on your chart. Thank you. I would like to see you next time. So before you go, make sure you subscribe to this channel so that you can get much opportunity from here. Thank you.